Hey everyone, welcome back to Corporate Decoder. Today we are diving into Microchip Technology's latest 10K filing, their annual report. It's a lengthy document, so let's see if we can find any hidden surprises or gotchas in there that Wall Street might be missing before they doll out. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss all of this with us. The company's public float as of September 30, 2024 was around $42.20 is basically the value of the company's readily available stock. Keep that number in mind as we go along to see how that lines up with their real financial performance. This report is packed with forward-looking statements, so basically, it is Microchip's best guess on what's going to happen, and they have no guarantees. And as usual, there's a warning that the future could look very different for many reasons. That's what they say to protect themselves. Microchip emphasizes responding quickly to customer orders. This means customers often order on short notice, so a lot of business relies on what they call turns orders, orders received and shipped in the same quarter. This reliance on turns orders can make forecasting sales difficult because it's hard to see very far into the future. A section in the 2023 US National Defense Authorization Act might affect Microchip. By December 2027, US government agencies will be banned from buying certain semiconductor products from companies linked to foreign governments of concern, such as some Chinese firms. This could impact Microchip if they can't find alternative sources for their products. Like many tech companies, Microchip is constantly under attack. They are the target of network compromises, attempts to steal data, and efforts to install malicious software. In fact, back in August 2024, there was a disruption which slowed down some of their manufacturing facilities. While they managed to recover without significant harm, the company admits there's no guarantee they can do that again. As they keep selling to customers who sell to the US government, they expect this risk to only increase going forward. Microchip values their employees, stating that employees are their greatest strength. This may be part of the reason why they have a good number of long-term employees. Their culture emphasizes workplace values and continuous improvement, things that Microchip believes strengthen their business. Let's quickly go over the key risks the company highlights for the coming year. Obviously, they mention risks related to global economic conditions, competition, and supply chain issues. They also have some concerns about cybersecurity incidents and how they manage their debt. Here's the laundry list: general economic conditions, trade restrictions and tariffs, order cancellations, inventory levels, disruptions due to public health concerns, changes in demand, raw material availability, competitive developments, and unauthorized copying of their products. Microchip is heavily reliant on foreign sales. Around 75% of their revenue comes from international customers, including a big chunk from China and Taiwan. This reliance exposes them to all sorts of political and economic risks, like trade restrictions, currency fluctuations, and even potential disruptions from political instability. Their technology licensing business depends on their super flash technology. To be successful, they need to make sure their existing and future technology works, protects its intellectual property, limits their liability, and has foundries to produce these products. As a company selling to the US government, they also face risks related to privacy, data protection, and cybersecurity regulations. They must comply with various laws that govern government-regulated data, facility security clearances, to perform classified contracts and handling of controlled unclassified information, and export controlled data. The market price of Microchip's common stock has fluctuated in the past and is likely to fluctuate in the future. The trading price can go up or down from a variety of factors, including overall market conditions or announcements of other significant acquisitions by them or their competitors. The company admits it has had material weaknesses in its internal financial controls in the past. There is no assurance similar control issues will not be identified in the future. This stuff matters because if Microchip can't produce accurate financial statements on time, it hurts their reputation with investors and could subject them to all sorts of problems, legal or otherwise. New accounting rules could affect their financial results. What seems like a simple accounting adjustment can have major ripple effects and change how their transactions are reported. Currency exchange rates can also impact their operating results, and they can also have negative effects if customers transacting in that currency are unable to fulfill their contractual obligations. They may be required to make repayments of cash due to the tax incentives provided by national, state, and local governments. All of this affects operating results and overall financial positions. So we went over all the bad things that could happen, but what does it mean to Microchip? Let's check the numbers. In fiscal year 2025, net sales were about $4.4 billion, a decrease of 42.3% from the prior year's $7.6 billion. That's like losing more than 2 out of 5 customers. This decline was primarily due to slowing economic activity and customers trying to reduce their inventory levels. We also saw the different reasons for the decline of profits. The mixed signal microcontrollers decreased 47.3%. Axter Analog product line decreased approximately 42.6%. Gross profit also took a hit, falling to 56.1% of net sales from 65.4% the previous year. This was primarily due to lower sales volume and changes in product mix. They also had unabsorbed capacity charges, which basically means they were paying the bills for their factories, even though they weren't running at full speed. Research and development expenses decreased $113.6 million, or 10.4%. Selling, general and administrative expenses decreased $116.5 million, or 15.9%. Amortization of acquired intangible assets decreased by $114.9 million, or 18.9%. Operating expenses also took a major hit. The income tax expenses were nearly 10x of the income, which is crazy. Net cash provided by operating activities was $898.1 million in fiscal 2025. That sounds nice, but net cash provided by operating activities was $2.89 billion in fiscal 2024. That is a huge drop. They plan to limit capital expenditures. As a reminder, this may mean the company may fall further behind their competitors who are spending. All in all, you're looking at a company with serious debt. They have got about $5.66 billion of debt, with a significant amount that will mature within the next 12 months. This presents a real challenge. They say they're planning to refinance, but that's not a guarantee, especially with interest rates being what they are. The news isn't all grim. As of March 31, 2025, they have not identified any risks from cybersecurity threats. Although they had network disruptions in August 2024, the company has been able to deal with it. On the bright side, Microchip really seems to focus on company culture. They value continuous improvement, provide employee training, and offer tuition reimbursement. This kind of investment in their workforce could pay off in the long run by keeping the team motivated and innovative. There has never been a goodwill impairment charge through March 35, 2025 top. So what's the verdict? Here's my takes of Microchip is in a tough spot. While they are trying to cut costs and manage their operations efficiently, they are facing significant headwinds from a slowing economy, trade uncertainties, and intense competition. The debt burden is a major concern, and their reliance on foreign sales makes them vulnerable to global economic and political instability. It's going to be an uphill battle for them, but with their strong focus on company culture, it's not all over. What do you think about all this information? Let me know in the comments today. If you found this analysis helpful, please hit the like button and subscribe for more deep dives into corporate filings. And don't forget to join our Discord channel linked in the description for more discussions. Thanks for watching and see you next time.